Hi, we're back. Thanks for staying with us. I'm Don Balarjian, and I'm joined in studio by the Mortgage Minute Guy, Mr. Roger Schlesinger. That's how his friends call him. We call him the Mortgage Minute Guy. Roger, good to see you again.
Thank you, Don. Good to be here.
Roger, the last time you and I were on the program together, we had a kind of a light discussion about how people are so concerned about rates when they're shopping for mortgages, and yet we're at a period in time when they've never really been lower, at least in our lifetimes.
Not in modern times. They haven't been lower than they are right now, at least at the day that we're taping this, because and I'm very concerned about it, because people right now can get almost any loan they want, conforming or jumbo or super jumbo, in the 4% range. So whether you get 4 1/4 or 4 3/8 or 4 5/8, it doesn't matter. The savings is negligible, and the chance of you missing it by fooling around and looking for an eighth better or a quarter better or 3/8 better will cost you a lot, because one of these days this market will turn. We'll be in the sixes, and you'll say, "Oh my goodness gracious, what did I do? What did I do?" And let me give you a personal example. A few years back, probably 6 years ago, I had a house, and rates dropped dramatically, and I had a choice of taking 3 3/8 for 3 years or 3 7/8 for 5 years. And I said, you know what, I want the lower rate. I could knock more off of it. So I took the 3 3/8 for 3 years, and we paid the heck out of it, knocked off a tremendous amount of equity, and then 3 years later my wife said to me, we need to build on. So the loan was going to change anyway, so I said, fine, we've already set the money aside by paying it all the way down with the 3 3/8. So we pulled the money out and built on, and I felt like I built on for free. I did the right thing, but even if I'd done the wrong thing and taken the 3 7/8, I wouldn't have been hurt.
No. Well, it's amazing, because when I bought my first house 25 years ago, 1984, I assumed a 10.5% mortgage and thought I got a really good deal.
I remember.
And I think a couple of years later, when I bought my second house, I was so happy to have a mortgage of 9.9. To think that we're at half those rates or less than half those rates today, and people are still, wondering, is it going to go lower? Yeah. You're at 4.5%.
Right. The fact that you could pay off a house in 5 years, 10 years, 15 years, 20 or 30 years and never see 5%, you will laugh about. I guarantee you, in 3 years from now, you'll be rolling in the street laughing so hard that you have this kind of rate, and yet people are still shopping. Stop the shopping. Whether you deal with us or you deal with somebody else, get it done now.
Yeah, that's right, because it's going to happen at some point in time, as you said. I mean, we can look into a crystal ball, and it's not that far away that we're going to see mortgages in the sixes, and then God only knows from there on. That's
true, and you know what? We've already seen them back up. We were all the way down here about 4 months ago. Then we started backing up. We went into fives, and all of a sudden people say, "Well, I don't mind paying an extra point." You don't have to pay an extra point now. You probably have to pay 1 point to get the rate that you want. We have a lot of them with 0 points now. But you don't have to pay the extra points that you will if you miss them all. Don't miss them.
Now, let's talk about, of course, we're talking about conforming loans and people who are basically looking at traditional type mortgages. How about the people out there who say are self-employed, or they want to do stated income loans and these kinds of things? Is there still possibilities of doing that?
Well, we have jumbo loans up to $1.5 million, 60% loan to value, with a 720 credit score for self-employed people who we can go stated with. Mm-hmm. They have to be pretty strong liquid-wise, mm-hmm, as far as big liquid assets. They may have to put a deposit into a bank, depending on where we go, but you can get a stated loan that way right now.
Okay, so because it wasn't that long ago, you looked at me and said, forget about it.
Yeah, right, and then all of a sudden this popped up, and it's a great program. It's not for everybody, because everybody doesn't have a 720, everybody right, doesn't have 60% loan to value, and everybody isn't self-employed, and those are the 3 main reasons to do it.
Okay, now we've seen a very difficult real estate market where, say, for example, a home 3 years ago might have qualified for something like that, but with the depreciation, because maybe somebody on that street let their house go back to the bank, that kind of changes the whole diameter of that, doesn't it?
It makes it very difficult. But I'll tell you something right now. There's a lot of talk about letting the dollar go and devaluing it. And if we devalue the dollar, we won't have to worry about prices in real estate. They'll go through the roof, because devaluing the dollar is throwing an open house to the world and say, we're on sale.
Come by it, yeah. Okay. Once again, the Mortgage Minute Guy, Roger Schlesinger. Real quickly, Roger, your contact info.
866-304-9378 or mortgageminuteguy.com.
Thanks so much, Roger.
Thank you, Don.